Assets under management in the South African industry grew to approximately 69 billion rand as of June 2016. That's almost a 10% increase from the same measurement period during 2015. Unfortunately, we've seen most of the growth actually coming from very strong results from the managers and not from new capital coming into the industry. We are of the opinion that there was just all the impending changes with the regulation that new investors were slightly more hesitant to enter the hedge fund space. Just to put the 69 billion rand into perspective, it still represents a very small portion of the overall South African savings industry. The overall CIS and securities environment already manages total assets exceeding 2 trillion rand, and the largest unit trust in South Africa, which manages traditional asset classes, is already exceeding 100 billion rand. Some of the cash flows that we observed during the year, similar to previous year, investors still prefer larger assets according to management in a fund to allocate capital, but the larger funds are just getting bigger. So the total assets in this space that exceeds 2 billion rand already growing more, but new capital inflows going into funds that manage between 500 and 1 billion rand, compared to previous years when new investors preferred funds that had assets exceeding 1 billion rand. We've seen a market increase in hedge fund managers that hard closed their funds. What does this actually mean? The portfolios or the fund managers do not accept any new capital into their portfolio, rather focusing on producing positive returns than being major asset gatherers. These percentage has increased from 7.1% to almost close to 16%, showing the conservative nature of these managers, rather focusing on the positive returns. With the introduction of the new regulation, a further 76% of participants indicated that they are still open to new investments into their funds.